Hello, everybody. This is Jennifer Fox with Fox Property Management, and this is a December Fox Talks. And the focus on this Fox Talks is the market foundations and entry strategy for investors. So, talking a little bit about what's happening in Colorado, what's happening nationally. I actually just had a really great day in November at the Biz West conference, which was held at the new Limelight Hotel in Boulder. And it was 7 hours of just great information. And I highly recommend attending that if you are somebody who's just really interested in what's going on in the real estate market in general. There wasn't a lot of discussion about the rental market, but the real estate market and the trends in the real estate market really impact the property management side and investor side. And so I really found the information really interesting. So as we talk about the what's going on in Colorado real estate, real estate in Colorado still works. We have a very strong market in general, and it was really strong through 2010 and through 2020 and 21 and 22, and we're just having quite a correction right now. And so one of the things the economist said at the conference was that Colorado right now is 49th in appreciation of real estate assets in the country, 49th. Boulder's as a city is number 3. So just huge discrepancy in the way properties are holding value and those markets. And part of that in Colorado is just a change in population trends, right? Is that we have so many people coming to Colorado that a lot of large commercial investors built, had just a huge delivery of condos and attached dwellings for rent that have really changed the market because they started hitting the market a year and a half ago, 2 years ago, and we just haven't been able to get through all of that inventory yet. And so if you're somebody who owns a 2-bedroom, 2-bath condo in downtown Denver, you are competing with a huge amount of inventory. And so we're going to see that start to change. But on top of that, and we talked about this on another talk, we had a decrease in population growth. And so in general, Colorado's still a place people want to come to. We have a lot of great things happening here. It is still a growth area for jobs. All of that is really great, but there's still, there's been slowing in population growth. We do have a little bit too much inventory. And so investors, and then on top of that, on the real estate side, interest rates are a little higher. So it's a little harder for you to get into property. If you have 20% to put down as an investor, it's really hard to get the numbers to work, right? Rent hasn't dropped. It's dropped a little bit. It's not high enough to cover your mortgage if you are leveraged with only 20% down. If you are coming in with the 1031 exchange or as a cash buyer, this is an incredibly good time to buy. It's actually a great time to buy for everybody if you can weather the immediate storm, because the price of property, especially attached homes, is reduced dramatically. Can't even compare to the increase in your interest rate. As far as, we're seeing properties that are $50,000 less than they would have sold for a couple of years ago. And in the attached dwelling area, which a lot of you who invest might be looking at, there's a lot of things to consider around HOAs and whether an HOA is warrantable. So there's a lot of considerations, but it's a good time to be thinking about it. This is one of those moments where the economist who was speaking at the BizWest conference said that they're actually optimistic for 2026. There are trends coming that they're predicting that there will be some changes that increase the success and activity in the real estate market, and that will impact investors because the minute people start buying and the demand goes up, prices go up, and all that stuff starts to happen. And so this could be the opportunity. This particular economist said that he thinks we have hit the bottom, that this is the bottom. And we're starting to see an uptick now in commercial real estate, an uptick again in residential. So, I think it's an important thing to be thinking about if you are someone who's thinking about, do I want to continue to invest in real estate? If you're holding real estate in Colorado right now, it's been so successful for so many years. I mean, the majority of you who've worked with us have never even had a vacancy, maybe not even a vacant day. In years. And we're just seeing a change right now where we're getting a correction on those increased rental prices. And so it's a matter of getting your places rented, having people live in them, continuing to look at ways, talk to your tax advisor around what sort of investment do you make in your property? Is this a property where if you make some capital improvements will increase the value of your property? It's a good time to be thinking about that. And, it's we're seeing some job growth is forecast to be about 1.2% in 2025, and a little bit of an increase in 2026. And our vacancy rate's around 7% in Colorado right now, and nationwide it's about the same. Nationally, other markets are doing a little better than we are right now, but part of that's because we had our big boom, right? And they're having theirs right now. And people are thinking, do I move to Colorado or do I move to a state where the cost of living is a lot less? We have a high cost of living here in Colorado. So we have an amazing place to live. People want to be here, but it also, there is some consideration there. So I think what's important right now to be considering is, how the population and job growth impact the amount of people coming to the state of Colorado, and how that's going to impact you as a landlord, because and how inventory is moving out and how that's going to impact you as a landlord. And that the rental demand is actually still pretty strong. It's just we have so much inventory. So we are moving through that inventory, which is why 2026 is expected to be better. It's like a 2 to 3% increase in the rental market. Pricing in 2026 is what is anticipated. Um, and from a comparison to the rest of the country, we're still an incredibly strong market to be in. So I think this is a little bump, and I think it's an adjustment for a lot of us who invest in real estate in Colorado. But I think it's a great opportunity to get in the market, if you can tolerate either a loss on the front end, or comfortable with break even, or are able to put more money down on the property you're purchasing. And the other thing I just want to finish with is, it's a particularly good time to be looking for well positioned properties that could be excellent furnished properties, especially in Boulder and surrounding areas with Sundance coming. We are seeing really strong um, numbers and predictions for how that market's going to do, especially if you are walking distance to Pearl Street, you're walking distance to where Sundance films are going to be shown, or you have something unique about your property. We had someone today who has got beautiful property on a farm just outside of Boulder. That might be a really unique place for people to come and stay. And so that's another way to be thinking about residential real estate and different opportunities. So that's what I'll leave you with today. Nothing much to tell you about my hat, although you can just keep getting used to that. There will be new hats for every talk, because it's kind of fun and it's easy. And let's see, what else do I want to say? I think that's it. I will be back on for another talk in December about, let's see, what's next topic is going to be getting a little more specific on the markets to watch, and the different types of properties, and the success of different types of properties in locations, what type of property, whether it's attached, detached, whether you're dealing with HOAs, that sort of thing. So I hope you have a wonderful day, a wonderful holiday month, and we'll talk to you soon. Thank you.